is going to be. And right now I can tell you Bitcoin and the correlation to high tech is about a 1-to-1 correlation. So don't think you're going to get this diversification or downside protection by investing in crypto. Look at crypto as part of the future. That being said, very hard to value right here. Even smart guys like Ben, myself, who spend a lot of time in it, there's a lot of different things out there. It's like, valuing sports cards or wine collections. It's very, very difficult to do it, but it is a way of the future. If you have not been in Bitcoin, if you haven't been in some of these cryptocurrencies that you've been looking at and you're looking to dabble in, I'd much rather see people enter into it now with this pullback versus buying at the top, 2-3 months ago.
I mean, Rob, you would think that this administration would give a press conference on the spike in crime, on what's happening to border towns in Texas, in Arizona, or maybe about the impact of Afghanistan. But instead, and you don't hear a peep about inflation either. Instead, as Kelly just mentioned, they're pushing a voting rights bill because they want to federalize elections.
Yeah, I mean, it's absolutely ridiculous. And it's like you just pointed out, Maria, it's every single issue. I mean, you talk about what's going on with police officers. Biden's going to talk about systemic racism. Guess what? Did you hear the person who was translating for the police officer, Mora, who was just killed? He was a Latino. If you look at here, Fernando Arroyos was just buried also yesterday, a Los Angeles police officer who was shot and killed yesterday. They're not addressing the real issues. It's all window dressing. It's a window puppet pandering to his constituents. They don't want to address the real issues. They're buying their time. And why people think he's going to go down in the worst president in history. He's done absolutely nothing. What does he even stand for, Maria? And here's the worst part about it. As bad as the economy sounds right now, we're still waiting on this Build Back America tax hike that's going to be coming, that people are going to start to lose even more jobs. So the 3.6 million number is going to tick up, and we're seeing it already happening. When you look at earnings reports that's coming out, it's the lower end, smaller consumer that's being hurt right now the most.
Rob, I know you're looking for opportunities. You think it's a good time to buy Facebook and PayPal for long-term investors, right?
I mean,
the
absolutely.
safe bet right now is in dividend growth companies, but you like UPS and Procter, right? P&G?
Yeah, look, I've been doing this for 24 years. I know Lee's been doing this a long time, so it's not my first rodeo. And when you see these types of events, when you get companies like Facebook reporting earnings, yes, they miss, and you get these woodshed type of moments where you're down 24, 25%, that usually is a lot closer to a bottom than a top. Now, I'm horrible at trading, Maria, but I've been pretty good if I'm picking things with a 12 to 24 month time horizon. You don't get that by going where the comfort zone is, which is in value. Now, markets move really fast. This trade's been going on for a few months now. Some of these stocks are down 50 or 60%. So I caution people who are getting bearish today and throwing these technology names out because, look, this current administration is not pro-growth, in case you haven't heard. Some of these tax hikes that are coming down and this belief that the Fed is going to raise aggressive, I don't believe is going to be happening, and people are going to start looking for growth again.
Well, look, this has been the worst kept secret in all of media. This has been well known that they were a couple for a very long time, Rob.
Yeah, I mean, like Kelly said, the irony of it all is coming from CNN that preaches from their pulpit all the time, and now these are the types of things that's exposed. And hopefully, this is a little bit of a disruption to their credibility. But yeah, I mean, look, it's a pretty tough morning if you were a Zucker or a Berg this morning, and they're probably not feeling pretty good. They probably wish it was one of these Chinese lunar things like China, where things were closed down and hush hush. But good for them that the spotlight's on them right now.
Rob Luna, your thoughts on what we're seeing this morning? Not a major change on markets as these numbers hit the tape 5 minutes ago, Rob.
Yeah, I mean, it came in a little bit better than expected, but essentially that was in line. Into Cheryl and your point, Maria, the labor cost is definitely a surprise because what you hear out there, it's very hard to attract talent. But I think a lot of companies have been preparing this. They've seen this over the last year. There's been a lot of investments in technology, especially the types of technology that could displace people, unfortunately. And I think that's going to help keep a lid on rising labor costs here in the short run, at least. So at least for the Fed, again, to the point of all these hawkish people thinking we're going to see 4 or 5 rate hikes, I think the data that we're starting to see on the inflation side is going to slow down, and we're going to start to see more economic weakness that I truly believe, Maria, that you're not going to see as many hikes as a lot of people think.
Well, I mean, I agree with you. And how smart are all of our guests? Rob, thank you for weighing in on that. Kelly. Yeah, that's true. He's been spending a lot on elections and lobbying. Rob?
Look, in terms of this Dutch country here, I actually love it, Maria. I think this is great economic policy and something that the Biden administration should actually be looking at as a model. Look, this is where the vast majority of their revenue comes from. So if you say we're not going to build yachts over a certain size here because of the bridge, then what's going to happen? That's going to move somewhere else. They did this 3 or 4 years ago. It's going to take 2 weeks. He's paying the bill for it. I think it's good policy. We should look at our own oil and gas jobs that we're dismantling for things like national monuments and things like that, and understand these are the types of moves that we need to make sometimes. So kudos to those guys for making it happen for Jeff.
Rob, let me switch gears, ask you about these markets. We are hearing from Christine Lagarde, the president of the European Central Bank. As you know, the ECB decided to leave rates where they are. But she is making a serious, significant comment about inflation, saying that it was unanimous on the board that inflation is a major issue, and they're going to look at this again in March. It sounds like they're waiting until March to raise interest rates. Your thoughts on what we're seeing this morning in markets, given the ECB leaving rates unchanged, the Bank of England raising interest rates second time in a row, and all this economic data out this morning?
Yeah, well, I think, first of all, Maria, Christina Lagarde has it right. And waiting to March in these markets, as we've seen just in the month of January, is really a very long period of time. And, like we were saying earlier, the markets are leading indicators. They're going to move ahead way in advance of us actually seeing the slowdown. But what I'm most concerned about is someone who watches the data on a daily basis. If you look at average days on market in homes, if you look at what these companies are reporting, things are slowing down, and that continues to be reinforced. So I do believe if we raise rates faster than what most people are thinking that's going to happen, I do think we're going to throw this economy right into a recession. That's showing up in the stock market. But for investors, when these markets open, what I want people to be cautionary of is when stocks are down 40, 50%, you have to then start thinking, has all this bad news, which I do believe we will see, been priced into the market? Because most people don't understand that by the time stocks are down 50 or 60%, it's not the time to sell, because that news has already been priced in.
Remember what we saw earlier in the week from Google parent Alphabet? It was clear that Google was one of the big beneficiaries of the stay-at-home trend, because more businesses were ramping up advertising to go on Google. They had a huge quarter, Rob, and this afternoon we'll hear from Amazon, which again gives us a broader outlook and a broader view into retail and the consumer, not just what's happening online, but how much people are spending, given the fact that we are now talking about the potential of a recession in 2023.
No, and I think so. And I think you're going to see out of Amazon, look, they touch everybody, the high-end consumer, and importantly, middle America, some of the lower-end consumers that are out there. And if you look at what PayPal announced, those consumers are getting crushed. And if you look at the stock, that stock got crushed yesterday. That's been consistent with what Facebook is saying. If you look at Meta platforms, if you look at some of the smaller end consumers, the smaller priced items, that's really where they got hit. So I think Amazon, we're going to have to watch for that. If they miss at all, as we've seen, watch out below. It's going to be pretty ugly.